Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Expanded speculative position limits for agricultural futures scheduled to go into effect on Monday could eventually add to market volatility as commodity funds are allowed to build larger bets on market direction, analysts said. Futures exchange operator CME Group, parent of the Chicago Board of Trade, is expanding position limits in wheat, corn, soybeans and other commodities following a final rule published in January by the U.S. futures regulator, the Commodity Futures Trading Commission. The change comes at a time when commodity funds hold large net long, or bought, positions in corn and soybean futures, typically a sign that funds expect prices to rise. Both markets have hit multi-year highs in recent months in response to tightening global grain supplies.
The U.S. Congress is investigating a multi-billion-dollar subsidy for chemically treated coal that is meant to reduce smokestack pollution, after evidence emerged that power plants using the fuel produced more smog not less. The outcome of the probe could play a big role in whether lawmakers vote to renew the subsidy, on track to expire at the end of this year. The Government Accountability Office, the investigative arm of Congress, is examining the refined coal tax credit program which generates at least $1 billion a year for U.S. corporations, according to GAO analysts that contacted Reuters requesting information.
Moving on to the top news in the energy sector.
The United States overtook Saudi Arabia as India's second biggest oil supplier after Iraq last month, as refiners boosted cheaper U.S. crude purchases to record levels to offset OPEC Plus supply cuts, data from trade sources showed. The switch in supplies, triggered by lower U.S. crude demand, coincided with Saudi Arabia's voluntary extra 1 million barrel per day, BPD, output cut, on top of an agreement by the Organization of the Petroleum Exporting Countries and its allies to maintain lower production. India's imports from the United States, the world's top producer, rose 48% to a record 545,300 barrels of oil per day in February from the prior month, accounting for 14% of India's overall imports last month, the data obtained by Reuters showed.
China's daily refinery throughput rose 15% in the first 2 months of the year, from a low base a year earlier, as fuel demand remains solid and refineries rush to hike production ahead of maintenance season. Refinery processing reached 114.24 million tons in the January to February period, data from the National Bureau of Statistics showed on Monday, equivalent to about 14.13 million barrels per day (BPD). The agency didn't disclose numbers for January and February separately. The daily rate is about the same level as in December 2020, up from 12.07 mln/bpd in January to February 2020 and also above the 12.68 million barrels of oil per day recorded in the first 2 months of 2019. Next, we have the top news in metal markets. China's aluminium production rose 8.4% in the first 2 months of 2021 compared with the same period last year, official data showed on Monday, as smelters added new capacity and cashed in on soaring prices. Primary aluminium output in China, the world's biggest aluminium producer, was 6.45 million tons in January and February combined, the National Bureau of Statistics said. The data suggests output averaged around 109,300 tons per day in January to February, setting a new daily record, versus around 105,400 tons per day in December and beating the previous record of about 106,000 tons in November.
Gold prices rose on Monday as U.S. Treasury yields backed off recent highs and investors awaited cues from the Federal Reserve's policy meeting. Spot gold rose 0.2% to $1,729.94 per ounce by 1:47 p.m. Eastern Daylight Saving Time, 17:47 GMT. U.S. gold futures settled up 0.5% at $1,729.20. Yields are calm this morning and the recent dip in gold is viewed as a buying opportunity by most, said David Megger, Director of Metals Trading at High Ridge Futures.
We will now look at the top news in the agricultural sector.
Russian wheat export prices fell for the second consecutive week last week after the Russian origin lost a major tender in Egypt and due to lower prices in Chicago, analysts said on Monday. Egypt, the second largest buyer of Russian wheat after Turkey, bought 360,000 tons of Romanian wheat last week. Russia imposed high wheat export tax from March 1, and the pace of its exports is down sharply. Russian wheat with 12.5% protein loading from Black Sea ports for supply in March was at $280 a ton free on board, FOB, at the end of last week, down $5 from the previous week, agriculture consultancy IKAR said. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.